Good afternoon, everyone. It's a sunny Wednesday in the Flint Hills of Kansas and in the Mile High city of Denver, where I am today. We're glad you've joined us for our user webinar that's going to cover the financial tools available to you in Student Manager, specifically Budget Builder and Pocket Ledger. Chuck, from looking at the responses to our sign-up questions, looks like you have an audience that's fairly new to these two financial resources, Budget Builder and Pocket Ledger. So everyone's going to be in full attention to learn how these tools can inform their financial decisions. And everyone, remember, while Chuck shares today, you can type any of your questions or comments in the chat box for us, and we'll see those and can get those answered for you. So, Chuck, I'm going to turn things over to you.
Very good. Well, again, what we're here about today is to help you avoid financial frenzy. And so you all know that, of course, as Student Manager gets registrations from the web or from staff entry, the finances of the income coming in are, by gosh, good. You take them to the bank and you deposit them. They are good to go. However, the dilemma is that because you generally have to turn all your expenses into the campus, and you may not be doing any tracking on the local end, that is at your program level, it's really hard sometimes to know whether or not individual programs are making their money. And that's going to be Pocket Ledger. That's what Pocket Ledger is going to give you, is the ability to really determine if your programs are breaking even, if they're carrying the load, if they're underperforming. At least will tell you, so you can make the decision, you know, are we satisfied with the level of return or the level of revenue that is the net usable, overhead usable revenue for these programs. And then, of course, Budget Builder is really at the front end of that, in which it will help you where you know you might have budget goals, where you might have class size limits, to make sure you come up with a fiscal charges, basically setting the fees to be able to make sure that your course makes, quote, budget. So that's what we're about. What is the difference? Well, they're completely two different things, but they are related to finances. Of course, Budget Builder is at the front end, at the planning, at the prospective side. It basically, what you do is for every single course or a particular class of courses, you know, introduction to golf, you have one course, multiple sections. You really only need to do the one section, and you'll know what to charge for the other golf sections. But it allows you to make sure that the fees you charge will cover the kind of expenses you're expecting, and that it brings in whatever revenue margin that you expect to have. And the big thing on that for program managers is that it will give you your go, no-go numbers. So that is something that I think budget program coordinators struggle with. Okay, when do I pull the plug on a course? Well, with Budget Builder, you're actually able to get a bona fide number that you know you're going to work off of. Flipping over now to Pocket Ledger, this is where you track the actual expense. Again, income, whoa, slow down here, pencil. Income is, of course, tracked through regular registration tracking, but this is where you can assign expenses to your programs. And again, it allows you to run, you know, if you want to know how much are you spending as a unit in the art program or in the professional development program for the different expenses, you're able to run expense reports based on program groups, which may or may not be possible within your campus system. So, all right, let's jump right into it here. Of course, we've said it again, fees are covered and recorded through the registration process, whether it be through the web or through Student Manager. Budget Builder. So what is the Budget Builder screen? And we're going to roll to Student Manager, and I didn't end up, hang on a sec, I thought I had started Student Manager demo. Let's get one of these up. Where's my October demo? I moved my demo around. October. October demo. September. Well, that's not what I want. I want October demo. There should be a demo named October, and I'm not seeing it. There it is in front of my nose. All right. So we'll get up. Cancel, no course. 19FA, student manager. Here we go. Budget builder. Sorry about that. On the course screen, in order to get to budget builder, you have to at least create the shell of a course. And then once you have a course done and saved it, you're going to have a budget button in your screen. This is where the Pocket Ledger or the budget builder comes in. So what it allows you to do is to set up the fees that you think you're going to charge. It allows you to add pass-through money or per-person expenses that you've got to deduct from your fee. You know that every student you got to buy a lunch and have breaks and supplies for. So you got $95 in this scenario out of any fee that you're never going to see. It goes directly to these per-person expenses. You then estimate your expenses, and then finally it will generate, and here is the magic, go, no go, break-even numbers right down here at the bottom. And then the what if side actually allows you to do some exploration of what happens if you change the fee or if you were to change the estimated attendance. And it's kind of striking to do that. Couple of ways to deal with fees when you're building a course or building a budget. If you create the shell of a course, go into Budget Builder and set up your fees, you can run those fees back to the course screen by doing update fees. If you already have a course that you've said, well, I'm pretty sure I want to charge $100 for this course, and you build that when you create the course shell, you can do import fees. You can do import fees and bring that into the Budget Builder tool. One of the big things, and we're gonna roll back on the costs here. I'm gonna actually skip over this now and get into we're gonna actually create one so that for those of you that have never done Budget Builder, we'll kind of show you where that is. Here's a general scenario: 1 day, hands-on course, limited number. So we know our max is what it's going to be. Expenses include instructor book, lunch, marketing, and breaks. So let's get into Manager. And we'll close this and we'll find our budget, 19FB, budget, budgeting class example. So you'll see in my particular shell course, I really don't have much in here other than a budget and a couple of dates. Now, one note on this is if you are using budgeting and you really want to just experiment with a course that you may never run, you create a dummy course record and go into the type and call this a pending course, because within Manager, pending has basically, it says this is a non-course, so it will never show up on the web. It'll, and it doesn't show up in the active course system, and it's a way to exclude that from normal views. Okay, now we're ready to go into the budget build. Well, and again, if you noted that it says changing the type to inactive because you can't have a pending course that's active. And so it actually smacked me down on that. I started to enter on this class. Again, we have a per person fee of a book and we have breaks. So we have to show that those are going to come out of the fee right off the top. Estimation. I put in an instructor. And so let's go ahead and add some marketing expense. Marketing. And what I'm doing here is using the major expense option for a Pocket Ledger classification code. Printing and mailing, and the share of the brochure was $75, and that is a sunk cost. Okay, so you note we have program cost, we have sunk cost. Well, what is the difference? Well, now we can get back to class here. Sunk costs are expenses that you have already spent before you come close to deciding if you're going to run that class or not. So the point is, you can't save your marketing costs. You can't go back and ask the printer to give you a refund if you cancel a class on things that have already been done before you're ready to make that go, no go decision. Those are sunk. Program costs, however, will only be paid typically if the program runs. So the big one there is instructor. Presumably you really don't pay the instructor up front. They're only going to get paid if their class runs. Books, food, those supplies that you're going to hand out on a per person basis. So we're back now. What other expenses? We'll add another marketing expense for this class, and that'll be the mailing and handling, and that's going to be $60. We have a pretty skinny marketing budget. Maybe we ought to spend more on marketing here. So that's brochure, and this is going to be mailing, and maybe we're going to add another expense that's going to be your media. Advertising, print media, that is $250, and that's a sunk cost as well. And that is TV, whatever, banner, ads. So as we're adding these expenses now, it's telling us that we have break-even numbers. Well, those are kind of bogus because we haven't set up the fees yet. So we're going to create some fees here. We're going to say the registration fee on this. We're going to start it at, say, $295. All right. I've entered my expenses. I've entered the per person costs, and I said my individual fee is going to be $295. I'm going to hit refresh, and it's telling me here, wow, for this class, if the expenses that I'm going to have, my go no go number is basically 2 people. Well, what is that? Well, what we're saying is the sunk cost, the formula for go no go minimum number is, at least the philosophy I've grown up is, as long as you can make enough money in running the class to cover the program costs. I'm sorry, I said sunk. As long as you have enough revenue to cover the costs of finishing the program, paying the instructor, paying the room rent, then you don't lose any more money at 1.9 students than if you were to cancel, because you're still going to have the mailing cost and the brochure cost out of pocket. You're not going to get those back. Now the break even of this is now at 3.4. So I only need, at this $295 fee, I only need 3.4 students to be able to run that class. All right, Sharon, I'm going to pause if there are questions or if somebody wants to point to an area. And while they're typing, I'll have you notice that down at the bottom, it's doing kind of a running summary of these columns that you're using. Here's the fee, base fee. This is the $37 of per person charges, which means we have a net usable per fee of $258. And here are our sunk costs and program costs as we've entered them right now. Sharon, we good?
Yep, I'm here. You're good. You're good.
All right. So now let's go ahead and put in an enrollment number. We were starting with the fee setup. Let's say we have those, we have 10 people out of 12. Now we do the refresh on that, and let's go look at, so that what it's telling us, really, if we're either paying that instructor way under market rate or our overhead costs for this are pretty darn low because our break even is pretty darn low. Let's keep that. Let's go to what if actual. This is where you really have an opportunity to do some exploration. So we're going to say a fee of $295, go, no go, break even, profit or loss, pretty darn good. If we can get 10 people, we'll actually net $1,600. So what is this? Well, what this is saying is, if we really just want to break even based on the fee, the expenses we've estimated, we could reduce the fee per person to $125 and we would break even. And so this is where this calculated fee or the what if area really allows you to explore that price enrollment curve. You got competing vectors on a graph. You say, where is the point that I can raise the fee and still get enough enrollments to make the money? You said, well, maybe let's try 195. Let's make this fee 195, and maybe that is a price point you think makes better sense with your audience. Well, your go no go and break even go up. You say, yeah, but that's I could probably get 5 or 6 people pretty easy with that. We would still get $695 if you really thought that at the fee of $195 you could get a full class of 10 versus maybe only getting the 5 or 6 at the $295 rate. You're able to go with that. All right, that is scenario 1. Still questions? Nothing yet, Sharon? I don't see any. We're gonna assume no. So let's go look at the other example. Is our conference one, 19FC. Budget, 19FB. 19FB as in budget. Budgeting a conference example. Okay, again, I went in here and I added a few more items. Lunches, breaks. We'll see. Let's get to the example that we're talking about. So 2-day conference, attendance, speakers, lunch both days, coffee, marketing, conference proceedings. All right, so I filled in the per person costs. I've started to fill in some of the instruction costs or the other costs. Speaker, hotels, speaker travels, speaker honorarium, proceedings, brochure, marketing. At this point then, let's say that I'm going to close on this and go to fees and say that I set up a hypothetical registration fee of, again, $295. And we're going to go back to the budget builder. And I'm going to say, I'm going to import those from the course. So when I did import, it brings the fees in from the main unit. And I'm going to be a little conservative and say, let's say we have 100 people on this. All right. And now we're going to refresh. Well, what that's telling us now is that to be a go, no go, which means at the 37 people, I would be able to cover my program costs. These are the costs that only occur if I run the program. The speaker costs, the speaker's travel, speaker's hotel room. Those are expenses that will only occur if I run the program because I was a good negotiator. And the break even on this is 78. Now, if I was thinking, hey, there's 250 people out there, let's do a couple things. Let's look at what if actuals, and we'll fill in our enrollment number. We're going to say we have 50. No, what I on the estimate? 200, I think. 100. Okay, so we're going to say, let's say 100 people, and the fee of $295. So again, that would give me a profit of $4,500. Now, you'll note over at the right what it's telling us. If I think that dropping it $40 would be better for my audience, I could still break even at $249. But again, if I leave it at $50 extra, obviously I stand to make a bigger margin of revenue on this particular program. So, and again, let's say, well, what if I got the 250? That the organizer, they always think you can get more than, of course, might likely to be. Good gravy, grape nuts, $36,000 we'd actually net on that program. Now, that would be a pretty, I don't have enough expenses in there on, obviously, those of you that do real programming. But the big thing on this, for those of you that do conferences, is that and you're working with a campus or with an external partner, is that generally everybody wants to put together a champagne set of expenses. We want lunches that are $25 a piece, and we want breaks that are $15 a piece, and the continental breakfast is $25. It's a fancy one, mimosas, the whole darn 9 yards. Hit the refresh button, and what you end up with is that your per person charges eat up more or most of your registration fee. And again, the dilemma is that you say, well, I think we ought to charge no more than $149 for this thing. And you do that and you say, okay, let's refresh that. And you say, well, Madam Organizer, you would need 8,420 people to break even at that, because your margin per student is $2. So again, when you're working with uninitiated conference planners, the budgeting tool is actually a great one. Set them down in front of the computer and have them whack away at that. Sharon, how we doing? Questions?
Doing just fine.
All right. Again, we played with that what if scenario. Budget Builder reports, again, the biggest benefit of Budget Builder is obviously it's before you go to print, where you get that dollar amount that you're going to charge for this course and have it be somewhat realistic. Pocket Ledger, we're going to pivot now to the other side of that. Pocket Ledger is a skunkworks way of reporting expenses. When I say skunkworks, that means, of course, you have to double enter your expenses. You're still going to have to go to the campus to do that. But we give you many ways to do it. You can go to a single cost center and load them in. You can enter expenses across multiple cost centers. You can go to the course itself and enter Pocket Ledger expenses. And for things like a catalog expense, $15,000, but it has 200 courses in, you can mass distribute a single overhead expense to individual courses so that you actually have a relative view of what the revenue or loss is on any given course. And where do you do that? From Student Manager. The regular Pocket Ledger entry is from Module Pocket Ledger. In the ledger entry one, a cost center, 19FB, B for budget, FB, come on, Chuck. Budgeting example. So at this point now, I could add expenses for this one class, bang, 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 just that. The other way is to go Module Ledger, all ledger entries. And in this one, when I add a new ledger, I pick a new, I add a new course every time, or I look up the course every time to add the expense for. And then, of course, when you're at the course itself, there is a Pocket Ledger button right on the class itself where you can go in and add expenses for this one particular class. So again, multiple ways to a course in there. Things that sometimes gets crossways is we talk about cost center and we talk about courses. Well, every course is a cost center, and what the cost center option allows you to do is to create a cost center in your finances tracking to be able to put overhead expenses in. Typically, you're going to have, every single course will have a cost center record, but you can add a new cost center record that would be fiscal year 19 overhead. And so you'd say 2019 general expense. Can't type. And then actually go in through the Module Pocket Ledger side, load in your general expenses, phone rent, your phone charges, your office expense, If you're having to pay rent to the university for the property you're living in, you're able to put it in there and still be able to include that in global Pocket Ledger reports. Meet the Pocket Ledger. Let's kind of dissect the Pocket Ledger. The first thing we're going to look at right here, expense category, and that would be where you really tie that to generally, these are all editable, to the expense codes that your business office uses to category your expenses. Major expense category, and this is a unique thing at ACEware. And what that allows you to do is to group your finely grained expenses into more global categories. So for instance, 1,000 is supplies and materials, and you might have a 1,001, which is, rental of automobile, materials, paper goods, or something or other. Well, you could create a general category of supplies, so you would have multiple finite or unique detailed expense items under a general category of expenses. Account number. This, if you wanted to change the account number that this expense should be tied to, you may. By default, it reads from the account number in the course. PO number is optional if you want to track that. The vendor name, again, you typically could put in a vendor, and this is actually stored or read from the firm table. Let's take a side trip into the expense codes. What the expense categories are is in the code editor, you put in the specific detailed expense category codes. Travel, honoraria, marketing, training and mailing, marketing, print media, or electronic media, web advertising, and then you can assign them a major expense category. And again, you are in control of both the detailed expense codes and the major expense categories. And again, the benefit is that it allows you in your reporting to kind of group those expenses together, especially if you're running expense reports to give to a client that you might be working with on a program. Enhanced Pocket Ledger. One of the options that you've got is to actually go ahead and you don't know what the expense is going to be for sure, but you know you're going to have a bill for printing. So you could put in, or a set of supplies, you could put in an estimate on the supply cost and mark it as projected. And then once the expense actually comes in, you would flip that to actual, edit the number to be accurate, and of course, update the date posted. Tracking the delivery of an item. If this was something you were ordering in books, or you were ordering in t-shirts, you could mark that it's been received. And then finally, if you wanted to actually track whether this bill has been paid within the university accounting, you could mark that paid item, and if you want, even track the general ledger or portfolio ID that this thing shows up in. So again, it depends on to what degree you're going to use this to help you kind of have a shadow tracking of those expenses that are running through the system. Sharon, I'm going to take a breather. What's going on, Nathan?
You're doing just fine.
We're good. All right. Couple other notes about Enhanced Pocket. When you are in add mode, you see generally a clone last entry button on the screen. And what that does is it will actually, it's kind of like clone name, with a clone your name option. It will allow copy the data from the last Pocket Ledger record entered into this particular one. So again, if you're entering 2 or 3 expenses that are the same in 2 or 3 different courses, if you enter them one after the other, you can use this clone last entry feature to not have to retype the description and the vendor and the price, assuming the price is this, or you edit, but the classification code, the major expense category, those would carry forward from that last expense. Now, in a minute, we're going to talk about mass distribution. If you've got more than 2 or 3 expenses to enter that are the same for multiple courses, you're going to want to use the mass distribution, which we'll talk about in just a second. And again, when you're on the clone, when you're in the add mode on a new Pocket Ledger record, if you hover over the clone last entry button, it'll give you a pop-up here showing you what the record was, save on, and the description was supplies. Cloning a course now. We talk about cloning. When you're cloning a course and you're using Pocket Ledger, it'll ask you if you want to clone the ledger records from the last instance of the class. And again, if you have classes with similar expenses from one term to the next, or from one section to the next, that's an option for you to use. And obviously, you can always go back and edit the dollar amounts if you want to. Posting instructor pay. Well, realistically, for most classes, 95 or more % of your expense of the class is your instructor. So even if you don't want to track the paper clips and the handouts, the dollar per person supply kit you're given to the student, if you use the post to ledger option for instructor pay, it will give you a pretty darn good idea of where you're coming in with your program expense or your revenue nets on individual classes. And there is an option to do that right from the course screen, the instructor panel. So once you know that this course is done, or that you know it's you're not going to cancel the course, and you've got, say, a standard fee of like per hour or flat fee, where you're not going to be worrying about percentages of revenue with a dropout later and all that hoo-ha. You can hit post to ledger, and it'll automatically create a Pocket Ledger record for this class without you having to do anything but hit one button. So it's pretty darn easy to do. Notes, especially on this Pocket Ledger instructor pay. So again, once you hit that post button, and let me just jump that up real quick. So we're going to do Extend Student Manager with ACEware, Pocket Ledger. We don't have anything in here. So no, we don't want to save this. We want to abandon it. Yeah, here we go. Instructor. Cheryl Scott is going to get paid per hour, and her rate per hour is $50. So $400 salary. So we say, okay, this class is going to go. I might as well post it to Pocket Ledger. All you do is you hit post to ledger, boom, it's done, and there automatically generates a Pocket Ledger record. So that now that class, you can actually go in and do your analysis. However, once you've posted that record, if there is a change that needs to be made in the pay, you screwed up on the number of hours, it really was 10 hours, not 8 hours, you have to go into that instructor, you have to go into the Pocket Ledger record and edit that to update it. And again, if you have started to log in an instructor on a course and put in a pay that I know that this class goes every time, I know I give the instructor $200, but you say, wait a minute, that instructor has to, we're not going to use that instructor, we're going to use a different one, they drop out, you get rid of them, you have to remove the Pocket Ledger record that was created. So again, the point is, once you create a record automatically from the course, you do have to manually go back and edit it. Mass distribute. We're going to do one of these in a second here, but the beauty of mass distribute is that you can set up the cost parameters for this big item, the catalog, and then automatically be able to distribute that to whatever courses you've got in the system. So how does that work? We go into Pocket Ledger, mass entry, we set up a program, advertising and mailing, printing, advertising, printing, and you'll note it has a major category of marketing. I don't have an account number identified for this because we're not assigning it to a course yet. The description is fall catalog. The vendor is K-State Services, Kansas State University. The dollar amount is $15,000. Can you get a brochure for $15,000? 150, not quite that many zeros. All right, $15,000. So that's the base data. Let's distribute that. So how can you do that? Well, if your courses are for this fall, you could use course number 19F. If it is a program brochure just for the kids and youth program, you could put in the program department name, or you could put in the account number, or you could put in the coordinator name. If Cheryl Scott, the coordinator, was particularly ambitious and generating a lot of print media just for her programs, you could put in the name of the coordinator who's going to be distributing that expenses to. This is for the fall brochure, so I can just put in 19F. Now, the beauty of this is I can set preview. It'll show every course for the fall, and I go through here and say, yep, those are all good, those are all good. And maybe we're going to say, trying to find one to pull out of here, ACEware training. Oh, wait a minute. No, we don't, that's not in the catalog, so we're going to take that out. So again, a budgeting class example, it's a test course. We're not going to assign money to that because that's fake. So again, you can remove courses from when you do a mass list like this. And then when you're done, we're going to say done. And now we're going to say we're okay with that. So it tells you what's going to happen. Here's what we're going to distribute. 85 courses, 176 per course. Are we going to do it? Yes. And it automatically entered 85 expenses on every course in that particular term. So if I go to any 19F course, go to Pocket Ledger, there is my $176.47. So that is mass distribute. And if you're using Pocket Ledger and you're using mass distribute, get on it. Pocket Ledger reports. We're wrapping up here, guys. So different reports available. Expense listings where you could run reports on just different types of expenses. Say, I just want to look at my marketing expense. I just want to look at how much I'm paying instructors. You can then do expense and income balances, which is where the real chickens come home to roost, in that you can tell how much revenue, surplus, or loss each course is generating. And we have a couple of other unique records, snapshots, which if you're entering contemporaneously, that is, you're trying to be up to date with when you incur expenses, you can actually do a timestamp of a month's worth of income and expense and see, here's how much I spent, here's how much I brought in for that particular month. Think of it as kind of a running checkbook balance. And then from the Pocket Ledger screen itself, you're able to generate a report. So from the main reporting area, we've got Pocket Ledger. Here we go, Pocket Ledger. Listings, where you say, I want to do it by classification. For instance, that classification 1000 for supplies. I can do it by the account number. If I say, I just want to show expenses logged against the non-credit programs account, I can do it by vendor. You know, how much money have we paid Chuck Havlicek, or how much money have we paid K-State Printing this year? And then income and expense balances. And this is where, again, the real beauty of this is, in that now that we've got expenses recorded, we can go into our term 19F and actually a report. Here's the expenses, here's the revenue, here's our balance. So, I mean, we're looking at right here the P&L statement on these programs, obviously based on data that you've got entered up to this minute. Reports, pocket ledger, income next balance. So that's the summary. If we wanted a detailed report, we can do our 19F ACE, 19F ACE. I'll give one that's got a good, yeah, here we go. So the detail listing will actually show by classification what are the expenses that are available or that are entered on a class. It'll show the revenue on that class, and it'll show your net balance on that. And it'll show how much is received, how much is outstanding, which would be accounts receivable, billings that haven't come in. Again, the kind of reports, 19F, and we'll get one for Pocket Ledger. And if you're using Pocket Ledgers, one of the other things that you've got is that as you're entering data in Pocket Ledger, you can hit List CC Enter, and that'll actually give you a quick thumbnail of your finances. Registration income to date, total expenses logged per date, and the balance. Again, based on data that you've got entered. So again, ways of generating that report. One of the things to note is that there are a number of base reports in the system besides the Pocket Ledger area that have automatic calculation of expenses that are in the system. Statistical reports will do that. Several of the accounting reports have that. Courses with fees, courses CE reports do it. And again, what the deal is that there are a couple of functions, ShowExp and GTLedge, that if you can give it the course number or the cost center number of a class, it will go pull the expenses out of Pocket Ledger and put them on that class report. So again, that is Pocket Ledger Financial Frenzy, and the point of that is that hopefully it will allow you a better handle to know where you are revenue-wise with those programs. So, Sharon, what I miss? What questions might people have?
Nicely done. It's thoroughly covered. We don't have any questions. I expect they'll come up when they start using the tool. But
well, I am before we get. Go ahead.
Go ahead.
I was just going to, before we let people go, stay with me, guys. I want you to raise your hand if you have entered a record in Pocket Ledger in the past year. Raise your hand if you have entered a record in Pocket Ledger in the past year. Brittany, I know you have, I'm pretty sure. Debbie, okay, Tracy. All right, so just literally a weak handful of you have done that. So there you go, Brittany. I'm going to have you put your hands down now. Raise your hand if you've been in Budget Builder, other than prepping for this webinar, in the past year. Raise your hand if you've opened up and created a budget record in Pocket. Oh, we've got a couple. Yay, way to go. Way to go. Shout out to Virginia and to Tennessee. So good deal. Well, anyway, I hope this helps you feel a little bit more brave about going into Pocket Ledger. Again, in my opinion, the benefit of, come back to me. The benefit of Pocket Ledger is that when you're working with new programs and that you haven't had experience with, I should say Pocket Ledger, Budget Builder, because it allows you to kind of explore different ways of how you might want to do the charging, because as you know, it is not a scientific mathematical formula. It is a horse, it's betting your money on the horses. How many people will this new class bring in? Because obviously it's the numbers. It's the numbers of folks. When you get into this number here, if you have 5 people, you lose money. If you have 15 people, you make out like a bandit. And it's all about butts in seats. And hopefully you're using some of the marketing tools in Manager to get those butts in the seats. But the budget builder at least allows you to get an idea of what parameters you might play with, to be able to come up with some numbers that are reasonable, go no go numbers that are reasonable, as you're building your courses. So, Sharon, last chance. Anybody with a shout out, or you want to make a comment there?
No, but I can tell you that those what ifs, that would be my favorite place to kind of mess around and see what
say how what happens when you change your fee, and again, it's really presumably your expenses. Obviously, you could buy a cheaper instructor or a cheaper speaker. Don't go after Bill Clinton, but go after Chuck Havlicek. I come pretty cheap. But that it's the enrollment number and the fee, obviously, which are the two big variables. What do you think you can get, and what do you think you can charge that's going to maximize that number you can get? So, guys and gals, enjoy this beautiful fall day. I hope it is nice in your country, and we'll look forward to seeing you. Hang on a second. Remember, next month it's holiday preparations. Now, is that going to be about holiday calendaring and using the holiday scheduler, Sharon?
Absolutely, and some of the new tools that are available there. Yep.
Sounds good. All right, everybody have a good one.
Remember, have a good afternoon, everyone. Bye-bye.
Bye-bye.